Good day, everyone. This is Les from BG Trading. Hope you are well. Today, I'm going to be talking about the four major gold producers on the SX. Which one are still the cheapest to buy if you have missed the boat? Also, I want to talk about gold itself, my thoughts on gold, and also take a look whether gold is the FOMO area or still a good opportunity to buy for 2023. So let's have a look. Just want to remind you, this isn't a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, how we avoid FOMO, which is number one mistake from traders, and much more on this channel. So if you like, please share this video with someone that would be interested and subscribe to the channel. I also would like to invite you to become a member of our free Facebook community. We call that Buy, Grow, and Sell Strategy for Share Traders. A lot of great quality content. Make sure you take a look on the details in the description below and become a member of this free Facebook community. Now, start with Northern Star, which the SX code is NST. And I'm going to go in the fundamentals. I'm going to go straight into the chart whether to find out whether the stock is what we call technically fair price, technically discounted price, which is exactly what we want to be buying companies, or it's a FOMO area. And then so if you haven't been following us, you know that BGS 20 and BG Trading Strategies, which are our flagship strategies that we teach people throughout our online training course. We normally, what we want to do, we want to avoid buying stocks at the FOMO area, simply because you don't want to be buying anything, not just stocks at the FOMO area. See, like what happened with people buying property in Sydney, in Melbourne back in 2021 for absolutely really high prices, and then now those properties are coming down 20%. They're losing a lot of money. So very same happened with the stocks, but the thing happens a lot quicker. And if you have a patience to wait exactly where you're supposed to be buying a particular a stock, then that's when you're going to make most of the trades buying a technically discounted price. In this case, look, start with NST, which is Northern Star Resources. NST is trading at $12, which is a lot higher than either our long-term moving average, which is the pink line represented on the pink line, and our short-term moving average, which is represented on the red line, which means the stock is indeed in the FOMO area. We don't want to be buying when these lines as well have a great distance between themselves. Ideally, you want to be buying stocks when those lines are at least on the same sort of level, and then buy the stock under the red line. In this case, as you can see, the candles are trading at 10% above the red line, which for some good quality stocks is still a technically fair price, but provided that the long-term moving average for this stock is well below the current levels, I would only be buying NST at the long-term moving average levels or under, which in this case brings the stock price back to $9. Okay, bring the stock price back to $9. Is that going to happen again? Sooner or later will happen, obviously. Now, I just want to make sure you guys understand that the moving average they also sort of move. That's why we call moving average, and then we might see that moving average above $10 in the next few months, which is fine. Then we want to be buying under that sort of pink line. At the moment, this distance is too great, too risky. I won't be looking into NST at all. Now let's move to Australian biggest gold producer, which is NEWCREST Mining. ASX code is NCM. Okay, this stock unlike Northern Star, this stock is actually looks a lot better for us. In fact, as you can see, the candle is trading right at the pink line, right at the long-term moving average, and that gives us a much safer enter. Nevertheless, I still want to be buying the stock under that pink line, and provided that the red line is still around the pink line. So the long-term moving average is sitting at 2092. So I want to buy anything around or under 2092 in this case. Obviously, waiting for the next pullback, would then be buying that stock. Now, we haven't done any trade with gold lately. I fair to say that we missed the boat, but obviously we've been trading other sectors like growth stocks, tech stocks, and stuff like this, but not gold. We missed the boat. I won't be buying gold now. Now let's check. Evolution mining. Okay, same case with evolution mining is not too bad. I mean, like if I was going to pick up one of those stocks to buy now, I would buy either NEWCREST mining or evolution mining, but I wouldn't be buying Northern Star Resources right now. It looks too dangerous for me. I don't like it. So evolution mining trading still a little bit at the FOMO area, but what I wanted to do is we want to wait this stock to come back in the next correction under $3, and then buy under $3. That's where I would be buying, at technically a fair price at least. Okay, obviously, if it goes 10% under this red line, then we talk about technically discounted price, which is the ideal entry. But provided that we have weakening US dollars in 2023, potential 2024 as well, there is some good prospect for gold as well as the overall stock market. Now, the last one I want to talk about is PERSEUS mining. Let's take a look. Look, PERSEUS mining is sort of a same sort of chart formation that the Northern Star. You see, these candles are trading well above the long-term moving average, and therefore any entry around this level is extremely dangerous, and I'm not interested. We're not interested using BGS 20 strategy. Look at this distance here now, 28% above that sort of level. Furthermore, the candle is also trading above the red line. Very dangerous. I wouldn't be buying now, even though there's good prospect for gold this year. Okay, we never know what the price is. Obviously, gold, as Mr. Robert Kiyosaki says, is God's money. It's God's money. But for me, I don't see much of a fundamental value in gold. Gold is like Bitcoin, for example. I rather buy stocks of gold than actually pure gold. So in this case, obviously, stocks like this generating some good cash flow, some good profit, but buying still under the moving average because I don't want to buy at the FOMO area. All right. So the last one I'm going to talk about is that's supposed to be the last one, but let's bring a resolution mine here. RSG, Resolute Mining. So this one is the only one that will be attempting to buy. All right, as per the chart formation. Nevertheless, there's always reasons why some particular stock is trading at lower prices, and I haven't actually gone through its fundamentals. I don't know exactly what's happening behind the scenes with Resolute Mine, but if you see the chart formation, that's type of chart formation that I will be buying. But still, if you look at from the short term, I still want to be buying under 20 cents, which is pretty much, I would wait the stock to fall about 15 to 20%. Then I will buy that. But then again, I haven't looked into fundamentals for this particular company. We traded that in the past, and then we had to that was back in 2021 by memory, and then we had to take stop loss because all of a sudden one of the mines was shut by the local government in Africa. I'm not fan of companies that hold this project offshore. That's why I would like to go way more with companies like NEWCREST Mining, Northern Star, and even Evolution. So my thoughts on RSG is certainly that we need to wait another 15% to buy it. It is definitely the one that looks cheaper than the others. We need to find out why. Potentially, maybe low mining life. I don't know. I'm actually going to look into this stock, potentially even make a video about RESOLUTE mine in the next few days. So stay tuned. Potentially that's going to happen. Now, gold's prices has risen really, really well. As you can see, they reflect exactly the same on the stock prices for gold. But one thing, and I have to disagree with a lot of investors out there, a lot of fund managers, that for me, gold never been a hedge opportunity. I think gold moves with the stock market. All right. If the stock market goes up, gold goes up. Stock market goes down, gold goes down as well. If you look into the historic data, that's why it's more likely with gold. And you don't need to go too far. It's just take a look here. Yeah. So the stock market has gone down all the way in 2022. So did gold, and then now we had big recovery. So did gold. So definitely it's not a hedge. So if you want to hedge, use other tools, other things to hedge, not gold. That's my opinion on gold. But as we're heading towards 2023 and 2024, if US dollar continues to weaken, then we will see further upside on gold. But for me at the moment, I would wait for a pullback. We missed the boat. And we're proud to say that we missed the boat. Rather be acknowledging that now than jumping at the FOMO levels. Okay? Many other opportunities in other sectors at the moment that are trading at technically fair and technically discounted prices with lower risks than that. This is my thoughts on gold stocks. Let us know what you think. If you agree, if you don't agree, just please put your comments as well. We are very happy to open some discussion regarding any opinion. Thank you very much, and I'll see you in the next video. Bye. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.